Okay, quick look at Bitcoin. We've had some nice action off the lows. Right now we're approaching some critical Fibonacci resistance up at the 61.8% retracement. But either way, the last couple of days has had some great action for Bitcoin. Looking at the entire advance from the low, so I have, as you can see up here, we got this wave B and two potential scenarios here. So we've got a wave C, looking at this from a kind of a skeptical, bearish standpoint, thinking that maybe this is a bear rally or a bull trap. That once we head up here and this wave 5 finishes, that will go all the way down and potentially even take out these lows before heading up to new all-time highs. Or we have the bullish scenario, and so far the evidence has favored the bullish scenario because this trend here has undoubtedly been up, and really there hasn't been much resistance the entire way. All right, so we'll go through the bullish scenario first. So starting back here at the low, so we count this as a wave 1 up. Now this wave 2 peak is higher than the wave 1, but we can actually count this as an expanded flat. It is actually a valid interpretation. So we have a wave 1, a wave 2. Now this is a wave 3 coming up, much larger than the wave 1. It's extended. So we have the first leg up, second, wave 3 of 3. We have a lot of these kind of quick vertical pops as it works its way back up. This was that short squeeze that happened. We had that nice 34,000 to 40,000. That's kind of 6,000 move within just a few hours. Something that we had not seen for a long time. So finishing wave 3 of 3 here. It's an ABC correction in wave 4, followed by currently in wave 5. Looking at this as 1 of 5, 2 of 5. Wave 3 of 5, finishing up here, the wave 4. And now this being the subwaves here of wave 5 of 5. So this 5 of 5 should break down into 5 subwaves in itself. So we have possibly a 1, 2, and this does look like a third wave. So 3 of 5 could potentially up here, maybe a 4 of 5 coming down here, and then a 5 of 5 may find resistance up at the 0.618 fib resistance, right about 51K, maybe just above it. All right, now the reason I pay a lot of attention to these fib levels, so check this out. If we come back here, so first advance above this first Fibonacci level, this 0.236, went above, came back, retested it, bounced off of it. Next area of resistance is right near the 38.2% retracement. Try to get above it, came back down, try to get above it again, couldn't. Follow back down. Now this wave 4 retracement took it straight back to the 0.236 fib. Down. And we come back up. So 38.2 didn't really act as much resistance, but it was also a back test area the same way this 0.236 retracement was. Now this 50%, so this was significant resistance on 1, 2, 3, 4, 5 pushes to try and sustain above this. So it actually tagged this level, overshot it a couple of times, but 5 times before it could actually come back up, flip it to support, which it has now done, as it's now continuing higher. And so based on that behavior, I'm expecting the next significant resistance to come at this next Fibonacci level. Right now, looking at sentiment right now. So the sentiment here is also consistent with this being either a third wave or a C wave. Regardless, it's a third wave of an impulse pattern. It's just whether or not you're taking a bearish or a bullish view on this. So the Bitcoin Fear and Greed Index It's been over 70, so it's been in greed. The 76 actually registered extreme greed. So we're extreme greed here around 47, 48K, which is actually more optimistic than we were at the 64, 65K level, which is interesting. I didn't check it to see what it is today, but I'm sure it's at least still around in the 70s, and that greed range has been hanging out there for a little while now. As it pops up here, I wouldn't be surprised to see it even get up into the 80s. Now, if we're taking this bearish view, so one thing to pay attention is that this is finishing an impulse. At the same time, a lot of other cryptos are also finishing impulses. So the market as a whole is aligned to be finishing impulses, possibly this weekend, maybe either by tomorrow or by Sunday, to be finishing either third waves up, which could also be labeled as a wave C, such as where Bitcoin is right now. Ethereum's in the same boat. Most altcoins are. Polkadot, VeChain, Kusama, it's probably in the same situation. Potentially Theta as well. Or you have the coins that have gone on to make new all-time highs, currently in wave 5 of a minor wave 1. So we've got coins like Cardano, Luna, and Solana that have really been leading the market off of these lows, showing a lot of strength over the last couple of weeks, and pushing into new all-time highs. So those are finishing minor wave 1s. The thing that follows a minor wave 1 would be a minor wave 2. So it would be a retracement sufficient to correct the entire move off the low to their new all-time highs. So it wouldn't mean that they would put in new lows, but it would still line it up with Bitcoin and potentially a pretty significant correction if this bearish scenario is playing out. So here's how we'll know. Here's what I'll be watching out for. All right, so we're looking potentially for this wave 5 of either wave C or wave 3 to finish somewhere around this 61.8 retracement, right around the 51K level. Now, the form and depth of the correction is really going to be important. So what I'm watching, so if this is a wave 3, then a wave 4 correction will not overlap the wave 1. So it can't overlap this 35.4K level. So if it gets down here and it overlaps where this wave 1 could be placed, which is really the lowest place that's valid to place a wave 1 in this bullish count. If it comes this low, then that's a huge red flag. It means that we're more likely than not going to work our way down and eventually take out these lows. All right, so a 30 or a wave 4 would often retrace, at least in Bitcoin, between 38.2 to 50% of the move. It could go deeper, but what if we just take a retracement tool? If we start here, go all the way up here. So let's just assume that we top out right here at this 51K level. So if it does, then we would be looking for the correction once it tops out to be contained ideally at this 38.2 fib, which lines up with this previous fourth wave. So this would be a support zone here that we would look. So maybe just kind of pull back here, find support. Would also have support. This is the volume weighted average price from the peak. Find support there and then reverse up to make a new high. Now, if it's not contained by this 38.2% retracement in this volume weighted average price, next support level would be the next larger fourth wave at the 61.8% fib level. If it doesn't hold support there, then chances are it's going to drop all the way down here, overlap, and then invalidate this entire bullish count. So that's actually what it would take to invalidate the bullish count and suggest that we may actually be heading lower. So if you're concerned about that, if you think that maybe we could head all the way down, even take out these lows and set up an even better buying opportunity potentially than we already had, just pay attention to some of these key levels. The way that I've been playing this, I'm not saying that you should play it the same way, but what has worked for me, so since the trend here has been up, I've been kind of taking positions long in the market, but just keeping a very close eye at potential turning points. So once we do hit this level, if it starts to turn back, I may cut back on some of my long positions, reduce risk, with the plan to potentially buy back in during a dip, whether it's kind of down here at a 38.2% retracement once we get some early confirmation of an uptrend coming back, or even if it goes all the way down and we do get a bearish scenario for a much larger intermediate wave forward than we've already had, then I may hold out until we even get below these lows, but really we'll have to see what happens. Now, in addition to the depth of the retracement, the other thing that I'll be looking at is the form of the retracement. So if we get, find the wave here. So if from this top, assuming that we top here, could go higher, may not go that high, we'll have to see. If we start getting patterns that look like 5 waves down, followed by 3 waves up, then that's a subtle clue that the overall trend has shifted to lower. Here, followed by, so if we get this, followed by an A, B, C, and we continue lower to form, so 5, 3, 5, 3, 5. That would actually point to the overall trend having shifted to lower, at least temporarily. It doesn't change the fact that the long-term trend is up if you zoom out further. So if you really zoom out to daily, weekly scale, the integrity of the bull market is still intact, even if it were to come all the way down, with the odds of that really decreasing the higher price pushes. The bull market itself would still actually be intact. Now, to invalidate this bearish count entirely, or at least lower the odds of it enough for me to completely stop labeling it, what I would be looking for would be a break of the all-time high. So above this 64, 65K level. If it can just continue on its merry way, push up through these next levels of resistance and make a new all-time high, I'll consider this wave four to be finished here. And the likelihood of then turning lower at that point, it's still possible. You could still get an expanded flat where you have an A, a B that actually overlaps the high and then comes down. But it's much, much less likely compared to turning back at one of these lower fib levels. Most likely, if it's going to turn back, it's probably going to turn back at this next level.